Hi, good morning. This is Lee. This video is about a new setting for this PMC strategy for gold futures trading. Now, this setting is being tested, and you should be able to use it for different purposes. Now, let's say if you wanted to achieve a small profit goal daily with very stable consistency, or you want to achieve larger profit, and in that case you needed to have larger account, basically larger risk capital to have this result. Larger means that you're going to have multiple contracts to be able to trade it on your account. Based on the margin requirement for gold, I believe it's $2,000 per contract for intraday trading margin. Now, if you trade one contract, you need to have $2,000, and if you trade 10 contracts, then you need to have $20,000 in your account as a margin requirement to trade 10 contracts. Then plus you have to have additional capital to cover the losses, and in case a margin call happens. But anyways, that's your financial situation. But for this strategy, this is the setting. Once you have the chart open, which is gold, you can see, and today is the 22nd of March. Today's market is very, very slow because of the federal interest rates meeting will be happening in the afternoon. So because of that, starting from 8:31, let's see, 8:31 Central Time and 8:27 Central Time. And starting from here, 7:37 until now, which is the 12:30 Central Time, we don't have these many bars printed because of the situation, and then the market's very slow. Liquidity is pretty low, however, for gold, and it's achievable. So let's say once you have this chart loaded, you go to strategy. Now, we'll have a data series loaded for 60 days for April contracts. Then you go to strategies, and you go, let's say the strategy downloaded is 0314, and the setting target we set 4 ticks, stop 37 ticks. 37 is pretty large. The reason being is because one reversal bar is 35 tick bar, and 37 is basically a 2 ticks on top of it. The trading time is 8 a.m. Central, same as this. Now, daily profit you set at 688, and daily loss is 1200. Now, enable this account, and then this strategy, and this rest of the settings is the same. Then you go to default quantity. I set it to 10. Now, 10 contracts, that's pretty big order. Usually, you'll get filled, no problem, most of the time. But you'll probably fill the different prices. And you should look at on the side. See, this is the, in the morning we had the 4 orders executed short at 1951.0. The other 6 orders was executed at 1951.1. 1 tick difference. We have 10 contracts filled. And profit taken at 1, 2, 3 contracts at the same price, and another 3 at the same price. 1 is lower. So you will have a couple ticks difference. But let's say you apply this setting on the strategy, and once it's done, you'll see that's today's profit. It's a 1 trade, 4 ticks, 10 contracts. Now, you look at the strategy performance, real time and historical. You'll see right here, we see a total net profit at this number. The start date is the 21st of January. For April contract is far. Usually you don't trade April contracts at that time, but you still can trade it. The end date is today. Now you look at number of trades with 68 trades, percent profitable, 100%. It means there's no losing trade. The reason is because we have the target set at 4 ticks, which is very minimum ticks, but it's very much achievable because each bar, when you have a signal traded here, And you just need the second bar to be formed, or even just have a touch right here, and you'll have your order, you'll have the target filled. So in the 2 bars, now in the rare cases, after a signal, you have a reversal bar. In the last 60 days, we don't see a reversal bar that has happened, and that has been happened, or whatever, right after the reversal bar, right after the signal, actually, the signal bar. This is the signal bar. And you see this third bar is a reversal bar. It's very rare. Now, for gold, you look at analysis, and the graph is fantastic, all right? And you look at the daily net profits around 700 or 300, either 1 trade or 2 trades. You have 2 trades, you have that profit. Now that's 10 contracts. In other words, that if you hit a stop loss, you're looking at $3,800 loss. Okay, that's one loss that you'll take for that day. Now, the reason being saying is in the last 60 days, that's the last 60 days of performance. Okay, we check. And 60 days. Okay, we don't have any loser. Well, the reason because it's gold. You know, gold. Let's look back to yesterday. You look at a signal bar, and the third bar after reversal, the third bar is formed. You know, let's say if you take this trade or you take this trade, even though this trade is taken, which I don't think so because the strategy will filter this out. But even though, let's say, without the filters, and you take this trade right here, and you'll have 4 ticks in profit, without doubt. Okay, and this is another one that's not going to be a profitable, but this time is not tradable time, which is 3 a.m. in the morning Central Time. I don't think people trade at that time, but you know, you would never know. So, and then you look at the signals and stuff. This is during the trading time, which is 8 a.m. It's all good. Okay. Well, I'm going to post this video on my page, and see if you have any questions. You can always ask me and play with the settings on the strategy that you have downloaded from the website and see how it goes. Thank you for watching. Bye-bye.